Yet in the collapse of Alpha, new order emerges. Bitcoin becomes unconfiscatable capital. And so, invest not to predict, but to preserve. Let your strategy follow truth, not fear. Artificial general intelligence will not amplify human trading. It will end it. Therefore, what remains is not prediction, but discernment.
This is the brief on capital survival strategies in the AGI era and the structural necessity of cryptocurrency. Okay, so the material we're looking at basically breaks down how artificial general intelligence, or AGI, is going to completely upend traditional investing for us humans. It forces a pretty radical rethink about how we hold on to and build wealth. All right, first up, the end of Alpha. Now, Alpha just means beating the market, right? Getting those better than average returns. Well, AGI kind of mathematically shuts that down for people. Why? Because AGI will know everything, instantly. There goes any information edge you thought you had. So trying to day trade or time the market, that's basically going to become a guaranteed way to lose money. The whole game shifts from, how do I win, to, what should I own? So, if you can't really win anymore, what's the move? That leads to the second idea, dual track accumulation. Survival means you gotta own stuff that's hard for anyone to take or control. Censorship resistant, they call it. This points to two main things. First, Bitcoin, BTC, which acts like digital gold because there's only ever going to be 21 million of them. And second, Ethereum, ETH, which is more like the infrastructure, maybe the future operating system for this whole AGI economy, handling smart contracts and payments between AIs. And finally, long-term survival? It demands what's called passive discipline, paired with keeping an eye on PQC. Since trying to time the market is out, you just got to stick to passively buying over the long haul, maybe using dollar-cost averaging or DCA. You know, buying a fixed amount regularly, no matter the price. But crucially, you also have to watch how these assets are preparing for post-quantum cryptography, PQC. That's about making sure they're safe from future quantum computers that could break their encryption. Monitoring that PQC upgrade is non-negotiable. Bottom line, the AGI era means investors need to ditch the short-term timing game and focus hard on passively building up ownership in strong, resilient digital infrastructure.
Welcome to the Deep Dive. Today, we're really getting into something big, a potential financial, even philosophical earthquake. How does capital itself survive when artificial general intelligence AGI really comes online?
Yeah, and this isn't your usual market update, is it? We're not talking about next quarter's earnings or, which tech stock is hot right now.
No, definitely not. Our mission here is to try and decode the, let's say, structural necessity of certain assets in a future where human gut feelings, human intuition in markets, it's basically obsolete.
And we should probably say up front, this stuff gets complex, no doubt. But the core ideas, we think they need to be understood by pretty much everyone, whether you're deep in finance already or just trying to figure out what's coming.
Like building a blueprint, right? If you were explaining it simply, you'd say we're looking past all the noise, the day-to-day ups and downs.
Exactly. We're trying to find the bedrock. What are the permanent things capital needs to cling to survive long term?
That's the real pivot we want you to make. Moving away from just speculating, that chase for quick profits.
Which are getting harder and harder anyway.
Right, and committing instead to understanding long-term ownership, structural preservation. So the question we're really trying to answer for you today is, when AGI changes the financial system, what should you own? And maybe more importantly, what's the disciplined way to build that ownership?
Okay, so let's unpack this big structural shift. And it starts with a warning that honestly sounds kind of radical, but it's actually built on data we've had for decades.
Right. The core idea from the source material is that AGI essentially, mathematically, seals off the hunt for alpha. Those excess returns beating the market.
It seals it off for human investors. And that's not meant to sound like doom and gloom, right? It's more like a necessary strategic rethink.
It is. And what's really interesting is how fast AGI forces this conclusion. It's not like AGI invents some totally new market flaw. It just perfects efficiency. Alpha, that edge, relies on someone knowing something or seeing something the rest of the market misses. And we know humans are already pretty bad at that consistently. I mean, look at this SPA data, right? Those stats comparing active managers to passive indexes.
Oh, absolutely. Decades of evidence there. The numbers are, frankly, Sobering. You hear that figure thrown around, and it's a hypothesis that just keeps proving true, something like 90% of active funds.
Run by smart, well-paid people with huge teams.
Exactly. They failed to beat their own benchmark index over, say, 5 years. Human skill, averaged out, just doesn't reliably beat simple diversification.
Okay, so that's the baseline now. Humans already struggle. So what happens when you introduce AGI? An intelligence that can swallow all the data news, market feeds, filings, sentiment, everything.
Instantly, with zero delay. And, crucially, zero human emotional bias.
Yeah, so it creates, what did you call it, information perfection?
Yes, something like that. It just erases information asymmetry. Poof, gone. Think about, like, human chess grandmasters versus Deep Blue or Stockfish now. The human doesn't stand a chance in raw calculation.
So in finance, if there's a tiny mispricing, a small arbitrage opportunity.
AGI sees it, models it, trades it, and the opportunity disappears. Before any human, even the fastest high-frequency trading algorithms we have now, can really react.
Okay, so alpha, the extra return, is mathematically locked away from humans. It's not just hard to win, it's basically guaranteed you'll lose over time because you're slower and biased.
You'll just bleed money on fees and slippage trying to play a game you can't win.
Which forces that crucial pivot you mentioned. The question for us humans changes completely.
Right. It stops being, how do I win? How do I time this? What's the hot pick? That's a dead end with AGI.
So what's the new question then? If we can't win on speed or insight, where do we look?
The focus has to shift from winning to owning. The question becomes, what foundational thing should I own, and how do I build up that ownership patiently? It forces you into thinking about long-term structure, resilience, discipline.
So the human investor role changes. From active trader trying to outsmart everyone.
It's more like a long-term architect, designing your ownership structure and sticking to the plan. Hashtag tag 1.2, shifting the beta, market average, landscape.
But it doesn't just stop at killing alpha, does it? The sources suggest AGI also messes with beta.
Yeah, this is the second punch, and maybe even more concerning in some ways.
So beta. Just to remind everyone, that's basically the market average return, right? The performance you get from just holding a broad basket of stuff, like an index fund, the risk you can't easily diversify away.
Exactly. And if alpha is gone, the fallback for many is just passive indexing. Just buy the market, get the beta return. Simple.
But AGI shakes that up too. How?
Or think about the speed of innovation AGI could unleash. If AGI dramatically accelerates how quickly new technologies are developed and adopted,
then old technologies, old companies, become obsolete much faster.
Precisely. The lifespan of a company, a business model, could shrink dramatically. We're talking about potentially much shorter cycles of what economists call creative destruction.
So the companies in the S&P 500 or the NASDAQ, they might churn in and out way faster than historically.
That's the hypothesis. Historically, big companies might stay dominant for decades. That tenure has already been shrinking, but AGI could put it into hyperdrive.
Okay, let me push back a tiny bit here. Couldn't AGI also make things more efficient, smoother, like optimizing supply chains, logistics? Couldn't that actually reduce volatility and make beta more stable?
That's a really critical point. And the sources seem to frame it as a contrast between, let's say, operational efficiency and systemic change.
Yeah.
Yes, AGI might make individual companies run smoother,
Okay.
but the rate at which entire sectors or business models get disrupted, that could accelerate massively. Imagine if AGI helps make, say, traditional energy companies mostly obsolete in 5 years instead of 50.
Wow, okay, that level of disruption would definitely hit the index.
Right. That volatility gets absorbed by the traditional beta indexes. The turnover of companies goes way up. So those index funds we thought were stable, diversified ways to hold wealth, they might become these constantly churning baskets, always homing stuff that's potentially on the verge of being disrupted.
So even being a disciplined passive investor, just holding the S&P 500 forever, you might be holding onto a structure that's decaying faster underneath.
It forces us to look for assets that are maybe outside that traditional company structure. Assets that are more foundational, more structurally sound, and less susceptible to that rapid technological obsolescence cycle. Hashtags tag 1.3 essential data pulse assets for the new order.
Which leads us naturally to, okay, if the old structures are shaky, what are the new anchors? What does the data tell us about these new foundational assets?
Exactly. The sources get very specific here about the data pulse we need to tune into, the core facts.
First up, Bitcoin, BTC. The fundamentals here are pretty concrete, right? Fact number one, a fixed supply cap. 21 million coins, period.
That's hard-coded. It's non-negotiable digital scarcity. Fact.
And fact number two, The halving cycles. That programmed reduction in new supply issuance.
Yep. Every 4 years or so, the rate of new Bitcoin creation gets cut in half, automatically, regardless of demand, price, politics, anything. It just happens. That programmed, predictable scarcity is a key data point in a world where, frankly, almost everything else digital can be copied infinitely.
Okay, so that's BTC. Then there's Ethereum, ETH. What are the core facts there?
Factually, ETH is the dominant general-purpose smart contract layer 1. It's the base layer, the programmable foundation for a huge range of decentralized applications, or dApps.
So it's not just money, it's more like the environment where automated transactions happen.
Precisely. It's the rails for decentralized computation and value transfer. That's its factual function.
And the third leg of this stool, security, specifically against quantum computing.
Yes, this is crucial. Fact, NIST, the U.S. National Institute of Standards and Technology, is actively working on standardizing post-quantum cryptography, PQC, new encryption methods that quantum computers can't break.
Because existing encryption, the stuff securing BTC and ETH right now,
is vulnerable, theoretically, to a powerful enough quantum computer in the future. So this PQC transition isn't optional. It's a factual, ongoing engineering necessity for the long-term survival of both systems.
Okay. And what about the relationship between BTC and ETH? They're not the same thing?
No, definitely not. And the observation, the data, shows their correlation varies. Sometimes they move together, sometimes they diverge, they go through phases.
Which suggests?
It confirms they're both foundational digital assets, structurally linked in this new world, but they serve distinct roles. One isn't just a substitute for the other. You kind of need both tracks.
Okay, so Act, I laid out the problem. AGI comes, human alpha disappears, traditional beta gets shaky. Act 2 is about the solution, the structural answer. And it starts with something pretty intense, deliberately, consciously giving up on timing the market.
Yeah, the sources call this the judgment. It's like accepting our human limitations in the face of AGI, because AGI eliminates that information asymmetry we talked about.
So any attempt by a human to do super short-term trading, trying to nip in and out,
it's guaranteed to result in losses over time, what we call zero-sum losses, but really negative sum once you factor in costs.
Why guaranteed, though? Let's break that down.
Well, in a market totally efficient, thanks to AGI, if you think you see a tiny edge and place a trade, you're always acting fractions of a second too late.
Right.
If your trade even gets filled, it's likely because an AGI on the other side allowed it. Maybe to offload a tiny bit of risk or manage its own inventory. You're essentially picking up the crumbs the algorithms leave behind.
And those crumbs aren't enough to cover the costs.
Exactly. You're fighting over microscopic price differences, and the system itself, the exchange fees, the bid-ask spread, the slippage, all that eats away at any potential gain. The math just works against the human trader. It's unforgiving.
So the only logical response, the only mandate for us humans is just stop, except you can't win that game.
Internalize it. Stop trying to time things. Stop chasing short-term moves based on news or gut feeling. That game is well and truly over.
But that doesn't mean get out of the market entirely, right?
No, not at all. It just means shifting your focus. You ban an active timing, but you embrace passive, disciplined ownership. Ownership of the underlying infrastructure that this new AGI economy will run on.
So we stop being traders.
And we become long-term owners, architects of our stake in the new platform.
Okay, which brings us right to that core idea, the dual role. Ethereum as the infrastructure, Bitcoin as the, what was the term? Non-confiscatable capital.
Exactly. Let's start with ETH as the candidate for the AGI operating system.
Okay. What does that mean functionally?
Think of ETH as the rails for decentralized computing. It provides verifiable execution of smart contracts. And crucially, it's the settlement layer. When AGIs need to interact, make agreements, execute complex tasks, pay each other for resources.
Without trusting a central intermediary.
Right. They need a neutral, trustless place to settle those transactions. Ethereum aims to be that place.
But hang on, AGI can run on Amazon Web Services, right? Or Google Cloud. Massive centralized servers. Why would it need a decentralized, sometimes slower, sometimes more expensive rail like Ethereum?
Trust. Or rather, the lack of need for it. Centralized clouds require you to trust the provider's trusts. Amazon won't tamper with your code, won't censor your transactions, won't change the rules.
Okay.
The AGI economy, especially with autonomous agents making deals, likely requires trust minimization. And that's where things like ZKML, zero-knowledge machine learning come in, combined with Ethereum's structure.
Okay, CKML, break that down simply. How does that help?
Imagine an AGI makes a complex decision, approves a loan, verifies some data. ZKML allows it to generate a tiny cryptographic proof saying essentially, I did this calculation correctly, following the public rules, using the inputs I was given, without revealing any secret data or the proprietary model itself.
Like a public receipt that proves honest work was done.
Exactly, and Ethereum is the place where you'd post that receipt immutably. So everyone can verify the AGI acted honestly without needing to trust the AGI's creator or a centralized platform. It provides verifiable truth for the AGI economy. That's the hypothesis.
Got it. So owning ETH becomes like owning a piece of the foundational infrastructure, the secure operating system for this future economy. And you potentially earn yield through staking, helping secure it.
Right. It's like infrastructure equity. Now, Bitcoin, BTC, its role is completely different.
It's not the operating system. It's the hedge, the reserve asset.
Precisely. BTC's value proposition comes primarily from its absolute scarcity, that hard 21 million cap, and its censorship resistance, its sheer difficulty to control or confiscate.
And that's where non-confiscatable capital comes in. Why is that specific quality so vital in the AGI era? More so than just being an inflation hedge.
Because think about the instability AGI could create in the traditional system. If whole industries are getting disrupted incredibly fast, if traditional beta is shaky, what might governments do?
Panic. Impose capital controls. Change monetary policy drastically.
All of the above are possibilities. Unpredictable policy shifts, maybe even attempts to seize certain assets if the old economic structures start really failing. BTC, being decentralized, global, secure by proof of work, with no central issuer. It stands apart from that. It's designed to be resistant to precisely those kinds of sovereign interventions. It's the hard, non-sovereign store of value you might need when everything else feels like it's built on shifting sands.
So it's the anchor, the ultimate hedge against not just inflation, but against systemic breakdown or unexpected government actions. Wealth preservation outside the traditional rails.
That's the core idea. It's your anchor in the storm. Hashtag tag 2.3, the quantum survival condition. PQC.
Okay, we have ETH as the infrastructure, BTC as the anchor, but there's a huge potential iceberg for both of these ships, right?
Absolutely. We have to address the single biggest technical threat. None of this matters. Not the scarcity, not the smart contracts, if the basic security of the cryptography gets broken.
And that's the quantum threat. Fact, quantum computers, if they become powerful enough, pose an existential threat to the public key cryptography used by, well, pretty much everything, including BTC and ETH.
Right. An algorithm called Shor's algorithm, run on a capable quantum computer, could theoretically break the elliptic curve cryptography that protects your private keys.
Meaning someone could figure out your secret key just by looking at your public address.
In theory, yes. Which means they could steal your funds. Game over.
Okay, that's terrifying. So what's the defense? What's the plan?
The plan is the proactive transition to post-quantum cryptography, PQC, using those new algorithms being standardized by NIST that we mentioned. Algorithms designed to resist attacks from both classical and quantum computers.
So both Bitcoin and Ethereum need to, upgrade their entire system?
Essentially, yes. It requires a coordinated upgrade, likely a hard fork, to integrate these new quantum-resistant algorithms before a quantum computer capable of breaking the old ones becomes a reality.
Which makes monitoring this PQC transition not just some tech detail, but absolutely fundamental.
It's existential. It's not just a software patch. It's a massive, complex, global coordination challenge for both communities. And for anyone considering these assets for the long term, watching the progress of that transition is non-negotiable. It's arguably the most important technical indicator of their future viability.
Okay. We've got the why. AGI changes everything, own the new infrastructure, and the reserve asset. Now, Act 3 is the how. Moving from the big ideas to actual practical steps. Order and discipline. Hashtag principle 1, accepting the end of alpha.
Right. And the very first principle is really a mental one. It flows directly from accepting AGI kills human alpha. The actionable mandate is simple, but maybe not easy. You have to consciously stop trying to time the market. Stop chasing short-term pumps.
Resisting that little voice that says, maybe this time I can catch the bottom, or I should sell now before it drops further.
Exactly. Resisting the constant noise, the FOMO, the FUD.
Yeah.
All your execution, your buying and selling needs to be stripped down to just long-term, passive, ideally decentralized accumulation.
That's the only game left for humans that's actually defensible.
It seems so. You trade the illusion of quick gains for the, hopefully, more certain path of steady long-term ownership. It's a fundamental shift in approach. Hashtag principle 2, dual track accumulation.
So how do you put that discipline accumulation into practice? That brings us to Principle 2, dual track accumulation.
Yeah, this formalizes it. You systematically divide your accumulation based on those two core functions we identified.
BTC and ETH?
Right. You allocate capital to BTC as your system hedge, that non-confiscatable, censorship-resistant anchor, and you allocate capital to ETH as your infrastructure equity, your stake in the potential operating system of the future, maybe participating in staking to earn yield and secure the network.
And the ratio between them? Like
Yeah.
50-50.
70-30. The sources are clear. There's no magic number here. That split your target allocation have to be your decision, based on your own risk tolerance, your time horizon, and frankly, your philosophical view. Do you lean more towards needing the ultimate hard money hedge, or are you more focused on the growth potential of the computational platform? That's a personal call.
Hashtag Principle 3 essential PQC monitoring. Okay, Principle 3 loops back to survival. If you're owning these assets long term, you must monitor the quantum threat mitigation. Essential PQC monitoring.
Non-negotiable. It's a primary health metric. If the networks aren't making steady, verifiable progress on implementing quantum-resistant cryptography,
Then the long-term value proposition is fundamentally broken. How does an average person track this, though? It sounds technical.
it requires paying attention, following the core developers' discussions, reading the official project roadmaps and updates, looking for announcements about specific algorithm implementations, things like crystals to lithium or Falcon being tested or deployed, checking that milestones are being met,
So it's less about the daily price charts.
and much more about checking the fundamental security roadmap. Is the network actively future-proofing itself? That's the key question. Hashtag Principle 4 Governance and Ethics, the AGAP Shield.
Now, besides the tech, there's a human element. Principle 4 talks about governance and ethics, this framework called the Agape Shield. Why is this so important?
Because in decentralized systems, there's no central boss, no police force. The health, the security, the long-term viability really depends on the behavior of the community itself. So this framework gives guidelines,
Like what?
core principles, consent, non-coercion, maintaining a trauma-safe environment for discussion and development.
Okay, consent and non-coercion in a crypto context. Does that mean things like respecting the outcomes of governance votes even if you disagree, not using your wealth or technical power to bully smaller players?
Exactly that. It's about recognizing that these networks thrive on voluntary participation and trust. Trying to force things, whether through economic pressure or exploiting code, ultimately undermines the whole system. You need cooperation, not conflict.
And the framework also stresses criticizing systems, not people.
Yes, this is vital for productive discussion. Focus critique on the code, the protocol rules, the economic incentives, the structures, not on attacking individuals or resorting to tribalism.
Because that just destroys trust and makes collaborative improvement impossible.
Right. You want to fix the bug, improve the system, not win an argument or tear someone down. That discipline and communication is crucial for navigating the complex challenges ahead, like PQC or scaling. Hashtag the execution routine, educational example.
Okay, so we have the principles. Let's get super practical. The actual routine for accumulation. We've abandoned timing, so the method is dollar cost averaging, DCA.
DCA is the natural fit. It's the simplest, most disciplined way to execute passive accumulation. The rule set is straightforward. Commit to buying a fixed dollar amount of your chosen assets, BTC, ETH, according to your allocation, at regular intervals, say weekly or monthly.
Regardless of the price.
Regardless of the price, sometimes you'll buy high, sometimes low. The key is consistency. You just keep accumulating steadily over time.
And the big advantage is psychological, right? It takes the emotion out of it.
Massively. By automating the decision, I buy X amount every Tuesday, you sidestep the fear and greed cycles. No agonizing over whether it's the right time to buy. No panic selling when the market dips.
You just stick to the plan. You're averaging your entry price over time and focusing on accumulating ownership.
It enforces that passive discipline we talked about. It's about accepting volatility and focusing on the long-term structural case for owning the asset. Hashtag the data checklist. FEC HYP, labeling for clarity.
So to run this DCA plan and stay informed without getting lost in noise, you need a checklist. What data points really matter? And we need to be clear about what's a hard fact versus a hypothesis.
Okay, on the FAST side, things you can verify. First, security events, any hacks, major bugs. And crucially, those PQC roadmap updates we discussed. Are they hitting milestones? Fact. Second, on-chain activity. Is the network actually being used? Look at transaction counts, network fees, activity in the DeFi space, validator performance for ETH. These are real-time indicators of demand and utility fact.
Okay, those are hard data points. What about the more speculative side, the hypotheses?
Here you might look at traditional macro indicators, things like real interest rate, the dollar index, DXY, maybe central bank liquidity measures. These fall under hypothesis.
But the sources included a big warning here, right?
A very strong warning. Be extremely cautious interpreting these traditional macro signals. Why? Because the very AGI-driven changes we're discussing might be breaking the old correlations. These indicators were built for the old economy.
They might not predict behavior in this new digital asset space reliably.
Exactly. They can provide context, but they absolutely should not be your primary trigger for buying or selling. Your disciplined DCA plan should override trying to time based on macro guesses.
Got it. Discipline first. And finally, there's a self-correction mechanism needed, rebalancing.
Yes. Periodically, maybe quarterly, maybe semi-annually, you need to check your actual allocation against your target.
So if you aimed for 60% BTC, 40% ETH, but ETH had a huge run and now it's 50-50.
You'd sell a bit of the ETH that outperformed and buy more BTC to get back to your target 60-40 split. It forces you to systematically take some profits from winners and add to relative underperformers, keeping your overall risk exposure aligned with your original plan. It maintains the structural integrity of your allocation.
Yeah.
Hashtag tag outro.
So as we wrap up this deep dive, we really have to hammer home the disclaimer. Please remember everything we've covered today. It's for education. It's for philosophical reflection about potential future structures.
Absolutely. It is not investment advice. It's not legal advice, not tax advice, certainly not medical advice. Any decisions you make are entirely yours. Your own judgment, your own free will, based on your own research and your local rules and regulations.
Yeah, please be careful and do your own homework.
The journey we've outlined, thinking about the AGI era, it really feels like a shift. Moving away from that constant, anxious chase for the next big gain, the possession mindset, and moving towards a focus on order, on discipline, building resilient structures for yourself in the face of what could be a very uncertain, but also potentially very efficient future. Maybe even approaching it with some gratitude for having tools that allow for this kind of planning.
And it requires more than just individual action, right? The sources talked about community and even generational thinking.
Yes, the complexity demands it, which leads to that final call to action, the mission ladder. It's layered.
Okay, so step one, individual action. What's the immediate takeaway?
Stop trying to predict timing. Seriously. Set up a disciplined, order-based accumulation plan, likely DCA, and commit to it long-term. Automate it if you can.
Step two, community action. What does that look like?
Find or form small, trusted learning groups. People you can talk with honestly. Use the group to collectively track things like PQC progress, check security news, and importantly, hold each other accountable to those ethical guidelines, the Agape Shield principles. Don't try to navigate this alone.
And the final step, generational action. This sounds bigger picture.
It is. It's about actively looking for and sharing real-world examples where this AGI crypto infrastructure is actually used for public good. Verifiable AI computations, systems ensuring data integrity using these decentralized rails.
Proving it's not just speculation, but technology that can build a more trustworthy foundation for society.
Exactly. Collecting those positive use cases helps build the long-term narrative and understanding. The goal isn't force or financial coercion. The structural arguments are what they are. The path forward relies on disciplined, ethical participation and building.
So carry that light forward. With that final thought, not by coercion, but by love. And so carry the light forward.
안녕하세요, 초진흥. 그러니까 AGI 시대에 우리 자산 어떻게 지킬지, 또 암호화폐는 무슨 상관인지 딱 핵심만 빠르게 짚어드릴게요. 미래에 엄청 똑똑한 인공지능 AGI가 나오면요, 우리가 돈 벌고 투자하는 방식이 확 바뀔 수 있대요. 그래서 이 변화 속에서 어떻게 살아남을지, 특히 비트코인이나 이더리움 같은 암호화폐가 왜 중요해지는지 알아보는 거예요. 자, 핵심 내용 들어갑니다. 첫째, AGI 시대가 오면 사람이 시장보다 더 잘 벌기는 거의 불가능해진대요. 시장 자체가 워낙 빨리 변하니까 단타보다는 뭘 길게 가지고 갈지가 중요해진다는 거죠. 둘째, AGI는 모든 정보를 투명하게 깔 거라서 짧게 사고 파는 건 별 의미가 없어질 수 있어요. 그래서 정부나 누가 함부로 뺏기 힘든 비트코인, 그리고 새로운 디지털 경제의 기반이 될 수 있는 이더리움 같은 자산이 더 중요해질 수 있다는 거예요. 비트코인은 금고처럼 안전하게, 이더리움은 뭐랄까, 디지털 세상의 인프라 같은 거죠. 셋째, 근데 좀 걱정되는 건 미래에 나올 엄청난 컴퓨터, 바로 양자 컴퓨터가 지금 쓰는 암호를 다 깨버릴 수 있다는 거예요. 그래서 비트코인이랑 이더리움이 이 공격에도 끄떡없는 새로운 암호 기술, 이걸 양자 내성 암호라고 하는데 이걸로 안전하게 갈아타는 게 진짜 중요해요. 이게 안 되면 좀 곤란하겠죠. 결론적으로 AGI 시대엔요, 단기 예측에 너무 힘쓰기보다는 세상 돌아가는 큰 그림을 보고 비트코인이나 이더리움 같은 걸 길게 모아가면서 이게 기술적으로 계속 안전한지 꼭 확인하는 게 현명한 전략이 될 거란 이야기입니다.
안녕하세요. 인공지능, 특히 사람처럼 생각하고 배우는 그 범용 인공지능, AGI가 세상을 바꿀 거라는 이야기, 이거 이제 정말 많이들 들으셨죠? 그런데 이게 그냥 와, 신기하다 하고 넘어갈 뉴스가 아니고요. 바로 여러분의 자산, 소중한 돈을 어떻게 지키고 또 불려나가야 할지에 대한 아주 근본적인 질문을 던지고 있다는 점 혹시 좀 깊이 생각해 보셨나요? 오늘 저희는 여러분께서 보내주신 자료들을 좀 깊이 들여다보려고 합니다. 이 AGI라는 거대한 파도가 올 때 우리 자본은 어떻게 살아남을 수 있을까? 그리고 왜 비트코인, BTC나 이더리움, ETH 같은 암호화폐가 중요해질 수 있는지 그 본질, 핵심 원리를 한번 파헤쳐보죠. 너무 어렵게 생각하실 필요는 없고요. 복잡한 시장 분석 이런 거보다 핵심 아이디어 중심으로 아주 쉽게 옆에서 친구가 설명해 주듯이 풀어드릴 테니까 편안하게 들어주시면 좋겠습니다. 자, 한번 시작해 볼까요? 우선 이 자료들이 공통적으로 딱 짚는 첫 번째 큰 변화가요. AGI 때문에 인간 투자자가 시장 평균 수익률 넘어서는 거, 소위 알파를 추구하는 게 거의 불가능해진다. 이겁니다. 사실 예전부터도 대부분 펀드 매니저들이 장기적으로 보면 시장 평균, 그러니까 벤치마크를 이기기 어렵다는 통계는 꽤 있었잖아요.
네, 맞아요. 5년 기준으로 보면 거의 90% 가까이가 시장을 못 이겼다, 이런 보고도 있었죠.
그렇죠. 그런데 AGI는 이걸 아예 수학적으로 거의 게임 끝 수준으로 만든다는 건데 아니 왜 그런 걸까요? 정보가 더 많아지면 더 잘할 수 있는 거 아닌가요?
그 질문이 정말 핵심인데요. 언뜻 생각하면 정보가 많아지니까 더 유리할 것 같잖아요. 근데 AGI는 정보를 나 혼자만 아는 거, 이런 비밀 자체를 없애버리기 때문입니다. 자료 분석에 따르면요, AGI는 공개된 모든 정보를 거의 실시간으로 인간과는 비교도 안 되게 깊고 빠르게 분석해버려요. 그러면 특정 정보를 남들보다 살짝 먼저 알아내서 사고 팔고 이걸로 돈 버는 행위, 특히 아주 짧은 순간의 가격 변동을 이용하는 초단타 매매 같은 거요. 이건 이제 거의 승산이 없는 게임이 되는 거죠.
모두가 거의 동시에 같은 정보를 알게 되니까?
네, 그렇죠. 마치 모두가 똑같은 아주 상세한 지도를 실시간으로 보면서 달리기 시합을 하는 것과 비슷해지는 겁니다. 그래서 이 자료들은 이제 질문 자체를 바꿔야 한다, 이렇게 강조를 합니다. 어떻게 시장을 이길까? 이게 아니고요.
아니고?
네, 이 변화 속에서 나는 무엇을 가져야 하는가? 그리고 그걸 어떻게 꾸준히 모아갈 것인가? 이렇게 관점을 옮겨야 한다는 거죠.
아하. 단기적인 승부보다는 진짜 장기적인 소유, 그리고 축적, 이게 중요해지는 시대로 바뀐다, 이런 말씀이시군요.
네, 맞습니다. 바로 그겁니다.
명쾌하네요. 그런데 여기서 한 걸음 더 나아가서 이 자료들은 AGI가 단순히 알파만 없애는 게 아니라 시장 평균 자체, 그러니까 베타까지도 흔든다고 경고하더라고요. 이것도 무슨 뜻일까요? 그냥 안정적으로 시장 전체에 투자하는 것마저도 위험해진다는 걸까요? 와, 여기가 정말 궁금해지는데요.
네, 바로 그 지점이 이 자료들이 던지는 또 하나의 굉장히 중요한 메시지입니다. AGI는 기술 발전 속도를요, 지금과는 정말 비교할 수 없을 정도로 가속화시킬 가능성이 아주 크다고 봐요. 한번 상상해 보세요. 새로운 기술이 훨씬 빠르게 등장하고 세상을 막 바꾼다면 지금 잘 나가는 회사들 있잖아요. 이런 회사들이 순식간에 그냥 옛날 기술 쓰는 기업으로 전락할 수 있다는 거죠.
그렇게 빨리요?
네. 우리가 보통 말하는 시장 평균이라는 게 결국 여러 기업들 주가를 합쳐서 평균 낸 건데 그 구성원들이 너무 빨리 바뀌고 또 잘 나가다가 갑자기 어려워지고 이런 부침이 훨씬 심해진다는 겁니다. 이걸 좀 더 넓게 보면요. 우리가 그동안 그래도 안전하다고 믿었던 코스피나 S&P 500 같은 전통적인 시장 지수 자체에 투자하는 것조차 예전만큼 마음 편하지 않을 수 있다는 걸 의미하죠. 시장 전체의 안정성 자체가 흔들릴 수 있다는 거예요.
와, 이건 정말 큰 변화인데요.
그렇죠. 이런 불안정성이 커지는 환경 속에서 자료들은 새로운 형태의 자산에 좀 눈을 돌려야 한다 이렇게 제안합니다. 바로 미래 경제의 기반 시설, 즉 인프라 역할을 할 자산, 그리고 또 하나는 외부의 힘에 의해서 쉽게 빼앗기거나 검열당하지 않는 그런 자본, 뭐랄까 비몰수성, 검열 저항성 자본이라고 표현하는데 이런 것들의 가치가 부각된다는 겁니다.
아, 그래서 그 대안으로 나오는 게 비트코인이랑 이더리움이라는 거군요. 그럼 먼저 이더리움, ETH부터 좀 더 자세히 들여다볼까요? 자료에서 이걸 미래 AGI 경제의 운영체제, OS가 될 수도 있다 이렇게까지 표현하던데 와, 이건 좀 너무 거창하게 들리기도 하고요. 어떤 점에서 그런 가능성을 보는 걸까요? 아이들도 이해할 수 있게 설명해 주신다면요?
네, 운영체제라는 비유가 참 재밌죠. 이게 이더리움이 그냥 디지털 동전 같은 게 아니고요. 일종의 약속을 지키는 컴퓨터 프로그램을 실행시킬 수 있는 플랫폼이기 때문이에요. 이걸 기술적으로는 스마트 컨트랙트라고 부르는데요. 예를 들면 이런 거죠. 만약 내일 서울 날씨가 맑으면 A가 B에게 100원을 자동으로 보낸다. 이런 약속을 코드로 딱 만들어서 누구도 함부로 바꾸거나 없앨 수 없는 이더리움 네트워크 위에 올려놓는 거예요.
아, 자동으로 약속을 실행하는 컴퓨터 프로그램.
네. 또 이더리움은 특정 회사나 정부의 통제 없이도 누구나 앱을 만들고 돌릴 수 있는 그런 탈중앙화된 컴퓨터 역할도 하거든요. 자료들은 바로 이 두 가지 특징 때문에 이더리움이 미래에 AGI 서비스들이 아주 투명하게 작동하고 또 그 결과를 누구나 믿고 검증할 수 있게 만드는 데 필요한 핵심 인프라가 될 수 있다. 이렇게 보는 겁니다.
핵심 인프라.
네. 예를 들어서 AGI가 어떤 중요한 결정을 내렸을 때 그 결정 과정이 공정했는지, 속임수는 없었는지 확인하는 기술. 자료에선 JTML 같은 걸 언급하는데 이건 쉽게 말하면 중요한 비밀은 지키면서도 그게 진짜라는 증거만 딱 보여주는 마법 정도로 생각하시면 돼요. 이런 기술이랑 결합해서 아주 신뢰할 수 있는 AI 시스템을 만들 수 있다는 거죠. AI들끼리 서로 서비스 비용을 내거나 계약을 맺을 때도 이더리움이 그 기반이 될 수도 있고요.
활동할 수 있는 기본적인 판, 그 판을 깔아주는 역할을 할 수도 있다. 이런 거군요. 와, 정말 흥미로운 관점이네요. 그럼 비트코인, BTC는요? 이건 어떤 역할인가요? 자료에선 이걸 비몰수성 자본이라는 약간 어려운 말로 표현했던데 이건 어떤 의미로 받아들여야 할까요?
네, 비트코인의 핵심 특징은 딱 두 가지로 요약할 수 있을 것 같아요. 첫째는 총 발행량이 2,100만 개로 딱 정해져 있다는 거. 그래서 절대로 더 찍어낼 수가 없어요. 마치 세상에 금이 한정되어 있는 거랑 좀 비슷하죠.
아, 공급량이 고정되어 있다.
네, 그리고 둘째는 특정 정부나 은행 같은 중앙기관이 마음대로 개인의 비트코인을 빼앗거나 거래를 막기가 아주 어렵다는 점입니다. 이걸 검열 저항성이라고도 하는데요. 물론 100% 불가능하다 이렇게 말할 순 없겠지만 기존 금융 시스템보다는 훨씬 개인의 통제권이 강하다고 볼 수 있죠.
그렇군요.
이 자료들은 바로 이 특징들 때문에 비트코인이 중요해진다고 말하는 겁니다. 예를 들어서 어떤 나라의 경제가 아주 불안정해지거나 또는 정부가 국민들의 재산을 너무 과도하게 통제하려고 할 때 비트코인은 자신의 가치를 보존하고 또 국경을 넘어서 자유롭게 이동시킬 수 있는 대안적인 안전금고나 가치 저장 수단 역할을 할 수 있다는 거죠. 아까 AGI 시대에는 시장 평균, 즉 베타마저 흔들릴 수 있다고 했잖아요.
네, 그렇죠.
그럴 때 기댈 수 있는, 누구도 쉽게 간섭하거나 빼앗기 힘든 좀 독립적인 자본의 형태라는 겁니다. 그러니까 이건 이 격변의 시대에 내 자산을 어떻게 안전하게 지킬 것인가, 이 근본적인 질문에 대한 하나의 답이 될 수도 있다는 거죠. 참고로 비트코인하고 이더리움 가격이 항상 같이 움직이는 건 아닙니다. 시장 상황에 따라선 꽤 다른 흐름을 보일 때도 많아요.
아하, 그러니까 정리하면 장기적으로 볼 때 이더리움은 미래 디지털 경제의 인프라로서의 가능성, 그리고 비트코인은 예측 불가능한 위험에 대비하는 어떤 독립적인 가치 저정고로서의 의미가 있을 수 있다. 이제 그림이 좀 그려지는 것 같습니다. 그런데 이 자료들 보니까 희망적인 이야기만 하는 건 아니더라고요. 양자 컴퓨터라는 엄청난 위협이 다가오고 있다 이렇게 경고하는데요. 이게 현재 암호화폐 시스템에는 정말 치명적일 수 있는 건가요?
네, 이 부분은 정말 간과해서는 안 될 아주 중대한 문제입니다. 현재 비트코인, 이더리움을 포함한 거의 대부분의 암호화폐 보안 시스템, 심지어 우리가 매일 쓰는 인터넷 뱅킹이나 온라인 쇼핑의 보안까지도 공개 키 암호라는 방식에 의존하고 있어요. 이건 아주 큰 숫자를 소인수분해하는 것, 그러니까 두 개의 작은 소수로 나누는 게 현재 컴퓨터로는 계산이 너무너무 오래 걸려서 사실상 불가능하다는 수학적인 원리를 이용한 일종의 디지털 자물쇠 같은 건데요.
네, 디지털 자물쇠.
문제는 미래에 만약에 엄청나게 강력한 양자 컴퓨터가 실제로 개발된다면 이 수학 문제를 지금 컴퓨터보다 정말 비교도 안 되게 빨리 풀어버릴 수 있다는 겁니다.
헉.
쉽게 말해서 지금 우리가 쓰는 거의 모든 디지털 자물쇠를 그냥 한 번에 열어버릴 수 있는 만능 열쇠가 등장할 수 있다는 거죠.
와, 상상만 해도 좀 무서운데요?
그렇죠. 그렇게 되면 우리가 안전하다고 믿었던 디지털 지갑이나 계좌가 순식간에 그냥 털릴 위험에 처하게 되는 겁니다. 그래서 지금 전 세계적으로 특히 미국 국립표준기술연구소 NSIT 같은 곳을 중심으로 해서 이 미래의 양자 컴퓨터 공격에도 끄떡없는 새로운 암호 기술, 즉 양자내성 암호, 영어로는 PQC라고 하는데요. 이걸 만들고 표준화하는 작업이 굉장히 활발하게 진행 중입니다.
아, PQC.
네. 그리고 이 자료들은 비트코인과 이더리움이 이 PQC라는 새로운 더 강력한 자물쇠로 성공적으로 업그레이드를 하는 계획, 그러니까 로드맵을 완수하는 것이 이게 단순한 기술 개선 차원이 아니라 말 그대로 이 자산들의 생존이 걸린 문제다. 이렇게 아주 강력하게 강조하고 있습니다.
생존이 걸린 문제다.
네. 만약 이 전원에 실패한다면 앞에서 말한 모든 잠재력이나 가능성은 그냥 물거품이 될 수도 있다는 거죠.
잠깐만요. 그럼 지금 우리가 얘기하는 비트코인이나 이더리움의 어떤 미래 가치라는 게 결국은 이 PQC 전환 성공 여부에 달려있다는 거잖아요. 와, 이건 정말 정신이 번쩍 드는 이야기인데요. 이건 꼭 지켜봐야 할 부분이네요. 그렇다면 이 모든 내용을 종합해 볼 때 이 자료들은 우리에게 그래서 뭘 어떻게 하라고 제안하는 건가요? 단순히 사서 뭐하라 이런 거 이상일 것 같은데요.
맞습니다. 자료들은 구체적인 행동 원칙 몇 가지를 제시하는데요. 첫째는 단기적인 가격 예측이나 시장 타이밍을 맞추려는 시도, 이런 거는 과감히 포기하라는 겁니다. AGI 시대에는 그런 예측이 더욱 무의미해질 가능성이 높기 때문이죠. 대신 장기적인 관점에서 꾸준히 그리고 위험을 나눠서, 즉 분산해서 자산을 모아가는 자기만의 원칙과 질서를 세우고 지켜라, 이렇게 강조합니다. 감정에 휘둘리지 말고요.
자기만의 원칙과 질서.
듀얼 트랙 전략을 제안합니다. 비트코인은 아까 말씀드린 것처럼 예측 불가능한 시스템 전체의 위험에 대비하는 약간 보험, 해지 같은 성격으로 보고, 이더리움은 미래 디지털 경제 인프라에 대한 투자, 이런 관점으로 봐서 각자의 위험 감수 능력이나 철학에 맞춰서 비중을 조절하면서 꾸준히 모아가라는 거죠.
둘 다 가져가되 역할과 비중을 조절하라.
그렇죠. 어느 한쪽에 몰빵하기보다는 역할을 나눠서 가져가는 겁니다. 셋째는 아까 이야기했던 그 PQC 전환 로드맵이 제대로 진행되고 있는지, 아니면 네트워크 보안에 문제는 없는지, 이런 핵심적인 기술 지표들을 꾸준히 감시하라, 이렇게 조언합니다. 이건 마치 우리가 투자한 회사의 재무 상태나 사업 진행 상황을 주기적으로 확인하는 것과 비슷하다고 보시면 돼요. 이 자산들의 근본적인 안정성과 직결된 문제니까요.
네, 중요하겠네요.
마지막으로 이 주제에 대해서 다른 사람들과 소통하거나 토론할 때는 특정 개인을 비난하거나 공격하기보다는 시스템이나 기술 자체의 문제점에 대한 건설적인 비판과 토론에 집중하는 좀 성숙한 자세가 필요하다, 이렇게 덧붙입니다.
네, 맞아요. 그리고 실행 방법 예시로는 매달 또는 매주 정해진 금액만큼 꾸준히 사모으는 방식, DCA라고 하죠. dollar cost averaging. 이게 감정적인 판단 실수를 줄이는 데 도움이 될 수 있다고 언급하고요. 또 말씀하신 PQC 진행 상황이나 아니면 네트워크가 실제로 얼마나 활발하게 사용되는지 보여주는 지표들, 그리고 세계 경제 전반의 흐름, 거시경제 지표 같은 것들을 주기적으로 살펴보되 그 의미를 해석할 때는 항상 여러 가능성을 열어두고 좀 신중해야 한다. 이런 조언도 인상 깊었습니다. 여기서 정말 중요한 점을 다시 한번 강조해야 할 것 같습니다. 이 자료들 역시 명확히 밝히고 있듯이 오늘 저희가 나눈 이야기들은 절대로 투자나 법률, 세금 등에 대한 직접적인 조언이 아닙니다. 모든 최종 결정은 이 내용을 들으시는 여러분 각자의 깊은 고민과 판단, 그리고 책임하에 내려져야 한다는 점 꼭 기억해 주시기 바랍니다. 자, 오늘 우리가 함께 파헤쳐본 내용을 한번 정리해 볼까요? AGI의 등장은 우리가 투자를 바라보는 방식을 정말 뿌리부터 바꾸고 있습니다. 단기 예측으로 시장을 이기려는 시도, 알파 추구는 점점 더 어려워지고 심지어 시장 전체에 투자하는 것, 베타마저도 예전만큼 안정적이지 않을 수 있다는 거죠. 이런 변화 속에서 미래 디지털 경제의 핵심 인프라로 성장을 잠재력을 가진 이더리움이나 아니면 어떤 권력에도 쉽게 휘둘리지 않는 독립적인 가치 저장 수단으로서의 비트코인을 장기적인 안목으로 꾸준히 모아가는 전략이 중요해질 수 있다. 이것이 오늘 탐구의 핵심 결론 중 하나였습니다.
네. 하지만 동시에 양자 컴퓨터라는 그 미래의 거대한 기술적 도전에 맞서서 PQC, 즉 양자 내성 암호로 성공적으로 전환하는 것이 이 자산들의 생존과 미래 가치를 담보하는 아주 결정적인 조건이라는 점도 분명히 확인했습니다. 결국 핵심은 눈앞의 이익이나 유행을 좇기보다는 변화하는 세상의 근본적인 구조, 이 자료들에서 질서라고 표현했던 것을 깊이 이해하고 그 이해를 바탕으로 자신만의 장기적인 축적 원칙을 세우고 꾸준히 실천하는 데 있다고 할 수 있겠습니다.
네, 그렇군요. 오늘 이야기는 여기서 마무리할 시간이지만 마지막으로 이 자료들이 우리에게 던지는 더 큰 질문 하나를 여러분께 남겨드리고 싶습니다. PQC 전환처럼 이렇게 중요하고 또 복잡한 기술적인 변화들을 우리 개개인이 어떻게 함께 지켜보고 또 검증해 나갈 수 있을까요? 더 나아가서 미래의 AGI와 이런 암호화폐 인프라가 단순히 개인의 자산 증식을 넘어서서 데이터의 조작을 막는다거나 정말 믿을 수 있는 AI 시스템을 만드는 것처럼 사회 전체의 이익이 되는 어떤 공적인 목표를 위해 기여할 방법은 없을까요? 이 복잡하고도 정말 흥미진진한 미래를 만들어가는 과정에서 우리 모두 한 번쯤 깊이 고민해 볼 만한 질문이 아닐까 생각합니다.